moment, an Aussie that's in the low 70s is not problematic, but were it to start creeping back towards that mid-70 level, I think we would start to see some jaw boning.
Nicki Hutley, many welcome back to Dukascopy TV.
Great to be here.
No problem at all. Now, today we're going to do a little bit of an RBA fact check following not only last week's meeting, but the huge data haul that we had also. So let's take a look firstly at the housing market, obviously a repeated concern throughout the Australian economy. Now, the Reserve Bank did suggest that regulators and regulations are now keeping the housing market in check. We've seen a pullback somewhat in housing approvals, also similarly residential construction. Is the RBA on top of this? Have they got this?
Look, I think there's a number of factors occurring here, and the RBA can take credit for perhaps a very small part of that, but there are bigger factors at play. Certainly the changes in regulations that APRA have introduced have seen a pullback in investor activity in the housing market particularly, but we're seeing a bit of a switch away from that and some better growth in the owner-occupier market. So there may just be a switching and not a real, in the name only rather than in who's going into the market. But more importantly, what we have seen, particularly in New South Wales, is a very significant further drop in affordability, and that is because wages growth has been very slow. And has been so for quite a long time, not keeping up with house prices. And that is really seeing the market pull back a little bit, not a long way. We're seeing prices nudge down. We're not seeing a collapse. The big key for the market in the year ahead is where are interest rates going? And at the moment, it looks like nowhere in a hurry. So we could actually see that market, when people settle down a bit, we get over the volatility that we've had, actually see housing sentiment start to shift again and get a little bit better, but it will be held back to the extent that affordability remains a key issue.
Now, one of the things, ironically almost, that the Reserve Bank has stopped their running commentary on is the Aussie dollar levels. Again, I say ironic because we're currently at an 8-month high. No doubt that's going to be giving the board a little bit of a headache, but is it not a slightly double-edged sword given sort of the commodity price outlook, that higher Aussie dollar might actually be a bit of a sigh of relief to some within the mining sector?
Well, maybe to the mining sector, but I think what we're looking for in the Australian economy is very much a transition away from mining and manufacturing, in fact, and into much more services, IT-based services even, but education, health, financial services, tourism. That's where the big engine of growth in the Australian economy is going to come from in the next few years. And in fact, in decades beyond, this is where our real opportunities lie. So at the moment, an Aussie that's in the low 70s is not problematic, but were it to start creeping back towards that mid-70 level, I think we would start to see some jaw boning, even though we know it's not effective. It's like nailing jelly to a wall, as I like to say, but there would be some concern, and maybe even that would be the reason to see rates nudge down a bit, or at least the jaw boning about it.
Well, the one area that we're seeing in terms of some level of easing bias is on inflation, which is and it's likely to continue to remain below sort of the long-term average trend line. Now, inflation, unlike the currency, can't be jawboned lower, but it still keeps popping up in the statement. What is the Reserve Bank hoping to achieve in those sort of consistent mentions?
Look, I don't think they're achieving anything other than to say to the market, I think, to set the expectation that whilst the economy is, in their language, is moving along at a reasonable and moderate pace, it's not so much that there's an easing bias, but that we're not getting towards a tightening bias. We're still staying neutral. And if things change, we can go further lower. Now, if things change is very much predicated on what happens, particularly in China, where the volatility we've seen this year in markets actually gets translated into real activity. So far, that doesn't look to be the case. With the inflation, what they're hoping to see is that the stronger employment numbers will start to feed into stronger wage numbers, and that maybe that pricing power can return back to the retailer in particular, but also service providers, so that we do see a slightly stronger move back into that, solidify in the target range rather than be nudging below.
Now, you mentioned there China, and we did have, as the statement came out, manufacturing in China hit a significant low. Does this continue to suggest not only the dominance of China sentiment over the Australian economy, but also the sort of headache that does lie ahead for Glenn Chill Out Stevens?
Yeah, I suspect he's not that chilled out when he's looking at the China numbers at the moment. They are concerning. I mean, the government has come back and said 6.5% to 7%, we're staying in that target, we'll do whatever it takes. We've seen nudges in terms of monetary policy, certainly. We're seeing some announcements around fiscal policy, a bit of stimulus, a bit of infrastructure spending, even some twiddling with the yuan. But is all that enough to make China get back to a more consolidated level of growth that makes Australia feel comfortable? I think that's going to be a hard ask. What we need to do, though, is to see that China is not, the rate of deceleration itself is starting to slow. So if we've got to a level where, even if it's 4 to 5% real terms, that's the bottom of the market, and that there'll be enough momentum, particularly stimulus from government, to keep that economy going. It is a worry for Australia, but that said, there are other big economies out there. We're still tied into the US, which will be very important in driving global growth this year. And Australia is getting more diversified. We're less reliant now on mining, is not the biggest part of the economy. It has been for a long time. But those services sector and the growth we're seeing, look at the New South Wales numbers. It's a very positive story.
Nicki, many thanks for the update.
You're very welcome.
That was Nicki Hutley there of Urbis. That is all we've got time for right now, but do join us next time for more exclusive interviews right here from the heart of the APAC region. I'm Natalie MacDonald. You've been watching Sydney Direct on Dukascopy TV. Goodbye for now.